Listen to me, because this is about your money and your security in retirement. We are talking about Medicare Part B. Now, why do I care so much? Because for most of you, this isn't just a bill, it's a mandatory deduction from your Social Security check that you might not even fully understand. If you are retired or about to retire, you have got to stand in your truth and understand exactly how much is leaving your pocket every single month. The biggest fear I hear from people is, Susie, will my healthcare costs eat up my entire check? And the answer is, they can if you aren't prepared. Medicare Part B is your medical insurance. It covers your doctors, your outpatient care, your screenings, the things that keep you alive and healthy. But it is not free. For 2026, the standard premium has jumped to $202.90 a month. That is up nearly $18 from last year. If you're sitting there thinking, wait a minute, my check didn't go up that much, you are feeling the squeeze. Now, how do they calculate this? This is where people get confused and where the mistakes happen. Most of you will pay that standard $202.90. But, and this is a big but, if you have been successful, if you have saved, or if you had a big income year recently, the government is going to ask you for more. They call this IRMAA, the Income-Related Monthly Adjustment Amount. Here is the trap: Social Security looks back 2 years. To decide what you pay in 2026, they are looking at your 2024 tax return. If you were a single filer in 2024 and your modified adjusted gross income, that's your MAGI, was over $109,000, or if you were married filing jointly and it was over $218,000, you are not paying $202.90. You could be paying anywhere from $284 all the way up to nearly $690 a month per person. Think about that. If you and your spouse are both on Medicare and you hit those higher brackets, you could be looking at over $1,300 a month just for Part B. That is a fortune. The question you need to ask yourself is my current income today the same as it was 2 years ago? Because for many of you, it isn't. Maybe you retired in 2025. Maybe you sold a business or a house in 2024 and had a one-time spike in income. If that is the case, you must not just sit there and take it. Your actionable takeaway is this: if your income has dropped due to a life-changing event, like retirement, divorce, or the death of a spouse, you need to file Form SSA 44 with the Social Security Administration. Do not wait for them to figure it out. They won't. You have to tell them, hey, my 2024 taxes don't represent my 2026 reality. That is how you protect your cash flow. Also, keep an eye on the Hold Harmless rule. This is your safety net. By law, for most people, the increase in your Medicare premium cannot be larger than the dollar amount of your Social Security cost of living adjustment. The government cannot take more than your raise. But, and listen closely, this rule does not apply if you are new to Medicare, if you don't collect Social Security yet, or if you are in those high-income IRMAA brackets. You work too hard for your money to let it leak out through misunderstandings. Check your MAGI, look at those 2024 returns, and if you see a surcharge coming that doesn't belong there, you get on that phone and you file that appeal. Be the master of your own financial destiny.